Pacific Edge, a company that has been constantly running on funds from investments and has not yet turned a profit. A company that has shot up 450% since June with a market cap of over $500 million. Why is this company valued so high considering its performance? And the main question being, is it still worth buying after this massive surge? Let's find out right now. Hey team, welcome to another video. We weren't planning on doing this video this early, but with the recent shareholder meeting that took place and a number of you recommending Pacific Edge, we thought it would be a good idea to bump this video up on the list. Keep the recommendations coming and make sure to smash that like button and subscribe button if you haven't so already. But for now, let's jump right into it. Beginning with their business and products. The field of medicine is definitely not our expertise, but we'll try to explain it the best way we understand it. So, in a nutshell, from how we understand Pacific Edge is that it is a cancer diagnostic company specializing in the discovery and commercialization of medical tests for better detection and management of cancer. Their commercial focus is on bladder cancer products for the short to medium term. This brings us to their current line of bladder products, the Cxbladder series. This series consists of 4 products, the Cxbladder Triage, Detect, Monitor, and Resolve. These tests cost $760 USD per test. Beginning with Triage, this test is used quickly to rule out the presence of bladder cancer, essentially ruling out patients with low risk of bladder cancer. Detect is used in a combination with other tests and procedures to inform you of bladder cancer presence in a quick and cost-efficient way with significant accuracy. Monitor is for patients who have already been treated for bladder cancer in the past and who have unique testing requirements. This is essential as it is important to monitor conditions even after years of treatment. CX Monitor tests help rule out the return of bladder cancer. The last one is Resolve. This one helps to identify those patients who are likely to have aggressive or more advanced bladder cancer. This is used in conjunction with other tests such as the CX Triage and Detect to assist in identifying patients with a high probability of having a high grade or are in a late stage of bladder cancer. Pacific Edge does have other products in the pipeline, but those products are in early stages, and that is why we are focusing on these core products that they have right now. Now, you may think, yeah, this seems fine and all, but what's the catch? Why would clinics, hospitals, and GPs replace their current method of testing? Well, because the tests that Pacific Edge provides are non-invasive, which means that they do not involve any instruments that are inserted into your body as compared to the current method of testing, which is invasive. In business, it's said that customer satisfaction is the key to success. Well, as you can see and read from the comments, the current way of testing is definitely not a big selling point for patients. In all fairness though, it's not surprising. Who in their right mind would be okay going into their room knowing how they were going to be tested? It looks painful as f. So having this alternative of a non-invasive method to test for bladder cancer with a simple urine test is a massive value proposition for clinics, hospitals, and GPs to adopt the product. This would potentially result in an increased level of testing as customers will not be as hesitant. This method of testing will also make those patients who have to come in for repetitive testing feel more at comfort. Pacific Edge has recently announced that Kaiser Permanente, one of the largest non-profit health providers in the US, has reached an agreement with the company on the commercial use of Cxbladder by its urologists. Kaiser Permanente has more than 12 million members, operates 39 hospitals, and employs 23,000 physicians, so this commercial agreement is a major milestone for Pacific Edge, which is expected to provide meaningful increase in revenues. Let's take a look at their performance and see what this deal could potentially mean for them going forward.
For many years and counting, Pacific Edge has been running on losses, losing a total of $77 million in just the last 4 years. Despite this, their share price has gone up from just 12 cents in June to now 71 cents, as they made 3 positive announcements over this time. The initial jump was from the Kaiser Permanente announcement, then the positive LCD decision in the USA, and the ANZ investment of $22 million at 65 cents a share. So what does all this mean? And what is the potential for Pacific Edge? Well, firstly, with the positive LCD decision, Pacific Edge's test for Cxbladder Detect and Monitor can now be reimbursed at US $760 per test from the US Centers for Medicare and Medicaid Services. This is a game-changing milestone for Pacific Edge, as it should help increase the usage of Cxbladder and make the payments become more consistent and timely, as well as the payment for previously performed tests. In terms of the previously performed tests on the CMS patients, Pacific Edge has invoiced almost 22,000 tests which has not been paid yet as of 31st of March 2020, and are still being negotiated. In regards to this, the company has said the gross value of those invoices is excess of $40 million. How much we may get is really difficult to estimate. It could be anything from 0 to 40 million. For Kaiser Permanente, their approval for commercial use of Cxbladder by their urologist is still unclear how much more revenue they could bring. However, they manage around 2% of the US urology patients, and according to our EY Parthenon Business Review, with approximately 7 million people present with hematuria each year, 3.4 million people evaluated for urothelial cancer each year, 81,000 people diagnosed with urothelial cancer each year, and 800,000 patients being actively monitored for bladder cancer 2 to 3 times per annum, Cxbladder has an estimated annual addressable market of $1.2 billion in the US. So if we simply assume the 2% as a proportion from Kaiser Permanente's patient, this could be a $24 million per year opportunity for Pacific Edge. If we look at analyst forecasts by Edison Group, they expect Pacific Edge to grow much faster from now and conservatively expect $20 million in revenue for 2021 and $44 million for 2022, with $17 million in profit. So to get a quick idea of how the valuation of $500 million look and compare it against the basic industry ratios with the values for 2022, with the healthcare sector's average PE ratio of 24.2 and average EV to revenue multiple of 8.2, it places Pacific Edge at around $400 million by 2022. So at a quick glance, the valuation of $500 million may not be justified. However, Edison Group does believe their numbers to be conservative and did not include the 22,000 invoices in their forecast. So depending on the success of the negotiation, their future outlook may vary significantly. Furthermore, Pacific Edge is still in its early stages of growing, and there is still a long way to reach its maximum potential. Also, as their throughputs grow, the company will be more profitable as they are in high margin business, with Cxbladder test unit only costing $100 to make, while charging $760 to CMS. And with a $22 million investment from ANZ, the company is in much better financial position and will help them accelerate their commercial progress and execute growth opportunities. However, risk is that although Pacific Edge is trying to get many other healthcare providers like these, they have said that the lead time to acquire a new healthcare provider does take very long. So our opinion on Pacific Edge is that although it does have future potential to grow, it could take a long time to see a meaningful return on the $500 million valuation. So we think it probably isn't a good idea to invest unless you're willing to wait a long time to see any sort of return, especially in this industry where there's a lot of process and procedures to get a product through to the consumers on a commercial basis. Having said this, we are always in it for the long term, so we wouldn't hesitate in putting a small portion of our portfolio, as they do have potential to grow, and we are willing to ride along in the journey.
Hope you enjoyed our analysis on this growth stock. We really do appreciate all the recommendations, so keep them coming. Make sure to smash that like button, and if you're new to our channel, hit that subscribe button for the latest analysis on many stocks. We'll see you next time.